What's up, everybody? I'm Ryan Grace. This is Value Unlocked. And in this video, as we start the month of November, I want to take a look at Bitcoin seasonality. This can be at times a controversial topic, but I think there's something to it. When we look at the historical performance of crypto, we apply this to other asset classes as well. You do see certain patterns that emerge at different points in time. And so we're going to talk about Bitcoin seasonality here today. We're going to look at what Bitcoin's best month typically is, and then the setup going into the end of the year. And so if we look at seasonality, we need to ask the question, are there any seasonal patterns to Bitcoin's price performance? Historically, how has it performed during different times of the year? And you can see that on this chart, clearly, there are months that are pretty bullish, or at least they have been, for Bitcoin. There's also times where Bitcoin's very bearish. I'll point out both September and January, but we'll focus on September because we just got through that month recently. September has not historically been a good month for Bitcoin. You can see that most of the time, it trades a lot lower, right? Of the 11-year period that we're looking at here, from 2013 to the most recently, September of 2023, we can see that it's only had 3 positive months. And its best month in September, or best year I should say, was 2016, where it was up 7%. But we just came from a positive September, and we had a positive October as well. Bitcoin was up close to 30% in October. We don't often see this, but when we do, when you can string together a couple of positive months, we tend to see that performance continue into the end of the year. And that's what's got me interested, because after a positive month in October, here on November 1st, the day that we're recording the video, we're getting into another month that typically has been a positive setup for Bitcoin. On average, November has seen a 46% move to the upside over the last 10 years. I do need to qualify this though, because when we look back at that chart, there is a month that really kind of skews this calculation. Bitcoin's had Bitcoin's had big months of November throughout the years. 2017 was up 63%. But November of 2013 was up 400%, and it kind of skews the calculation. So keep that in mind when we think about the average performance. But when we look at median performance, November tends to be a pretty good month. We've seen 7.5% in terms of the median performance for the month of November. On the other side of this, when we look at some of the worst months for Bitcoin, September, March, June, September really being one of the worst months, but we just had a positive September. So we'll see if that performance can continue. So based on how we've seen this trade, and really the theme being that when you have a positive September, you tend to see that performance carry into the end of the year, especially when you have a positive October. Both of those have just occurred. Where could we possibly get to? When we look at that median performance in the month of November of 7.5%, we can see where that could take us here on the chart. If we got that 46% return here that we've seen on average in November, including that 400% month in 2013, that might take us to 50,000. So to set some expectations, if in fact we do see history repeat, or maybe at least rhymes, we could see a lot higher prices here on the horizon as we head into the end of this year. That said, there's certainly a lot that could change. But instead of looking at seasonality and trying to predict whether that's going to happen or not, what we could do instead to set some realistic expectations and have an understanding of what's maybe probable here is that we could look at implied volatility. And what we can do when we have an implied volatility, and this applies to any asset, but for crypto here, we're going to take a look at Bitcoin. When we have that implied volatility, we can calculate a 1 standard deviation move. This is basically the range that market participants are expecting the price to trade within roughly 70% of the time, 68.2% of the time to be exact, but 70% of the time, this is what the market is pricing in, that the underlying price, in this case the price of Bitcoin, is going to do over a certain period of time. And this is how we can set realistic expectations for price based on implied volatility. We've got a formula up here on the screen that we can take a look at. And this formula is going to give us that expected move, or EM, the 1 standard deviation move. We need a price, that's the price of Bitcoin. Right now, the price of Bitcoin is 34,500. We need an implied volatility. Right now, the implied volatility of Bitcoin on a 30-day basis is 59%. And then we need to calculate the square root of our time period divided by the number of days in the year. So we're going to look at a 1 month time period here, or 30 days. We take 30, divide that by 365, take the square root of that value. And when we multiply the underlying price, the price of Bitcoin, its implied volatility, and the square root of 30 over 365, we get a range of $5,902, so almost $6,000. Now, this does not mean that the price is going to stay within that range. It's not a support, it's not a resistance, it doesn't mean it's going to go up, but the market is pricing in a probable range for the price of Bitcoin to trade within over the next 30 days, so on a 30-day forward basis of about $6,000. That could take us up towards 40,000 on the upside, or it could take us down towards 28,000 on the downside. And you can see that here in the price. And so that's probably a better way to come up with a realistic expectation for where the price of crypto or Bitcoin or any asset could trade when you have an implied volatility input, compared to going off of what's happened in the past, which is really what we're looking at when we consider that seasonality. That said, from a seasonality perspective, into the end of the year, things are looking good. Bitcoin was up almost 30% in October, continuing to hang around that 35,000 level right now. We'll see if that continues. Historically, again, November's been a pretty good month for Bitcoin, though anything can happen. When we look at implied volatility of about 60% right now, we've got about a $6,000 price move to the upside or to the downside that's being priced in the options markets, though it's important to consider that that can change. If we see implied volatility increase, let's say it goes from 60 to 70, we're going to see that price range widen out or increase as well. And the opposite is also true. If we see implied volatility decrease, it comes in. That's the market starting to price in a smaller expected move or a smaller range that the market thinks collectively that the price of Bitcoin is going to trade within over a certain period of time. So that's how we use that information. I thought that this was interesting to look at as we start a new month here. Month of November historically has been a positive month, 7.5% median return going back over the last 10 years. And the setup is kind of interesting here too. So keep your eye on implied volatility, keep realistic expectations in the front of your mind, and tune in again to Value Unlocked here on the Tasty Crypto YouTube channel. Subscribe to the channel, like the video, and let us know if there's anything else you want to see us cover in the comments below. Until then, I'm Ryan Grace. This is Value Unlocked.